All right, good day, everyone. Welcome back to another episode of Spark Your Fire. I'm your host, David Shih, and as always, I've got here my beautiful co-host, John Comino, dressed up today. By the way,
Yeah,
not in a shirt or t-shirt anymore, but yeah, we're fully into it now. It's already February. Can you believe it? It's like 6 weeks
yeah,
into 2025 already?
yeah. I'm already tired. So when's Christmas again? No, we can't even be thinking about the rest.
What
Uh,
Christmas? What Christmas?
yeah, but no, it's good. It's good. Like it's been a cracking start to the year from a property market perspective. So it's
Strong, eh?
right
Strong.
into it, right into it.
Strong. There's a
It's
lot of
exciting.
demand. There's a lot of demand at the moment, that's for sure. I think, especially with the looming interest rate reduction that's kind of closing, I think the economists is all kind of betting that February cut is now a very, very high chance.
Yeah,
I wonder whether Michelle Book is going to be the Valentine of everyone this month.
very nice, nicely said. Yes, we'll find out. We'll
We
find
will
out.
see. We will see.
It feels like a lock to me. I can't imagine that they don't do 25 basis points and that they do probably three this year. Because, there's no such thing as a rate cut. There's always a rate cutting cycle.
It'd
So
be
it's
good if
not.
they can do three this year. Although I don't know, the conservative part of me kind of still thinking more the two,
Yeah.
for various reasons on that. So, just yeah, okay. But yeah, look, let's have a chat about what we're seeing on the property on the ground at the moment, John. What are you seeing at the moment on the Sydney market? I heard it's we've got the auction clearance rate bouncing back into the 70s again, if I'm not mistaken,
Yeah.
last weekend.
Correct. Yeah, I think it's about 73 or 74%. I definitely track it. I also track the Core Logic Daily Index, so
Mm.
to see what the price is doing every day. And look, it's bouncing around, but there's definitely more green than there was. I think the property market was in Sydney at least was dropping from about September to December, so about 3 or 4 months there, and that I feel like that stopped. It's not going up necessarily, but it's certainly not going down anymore. It's plateauing. So
Mm.
what you and I discussed is a very shallow correction that occurred in the second, the last quarter, let's say, of last year or the second half. I feel like that's over. I'm out and about at the moment. There's a lot of buyers. I'm also hearing from agents that while there is a lot of buyers, there's not a lot of conviction and
Yeah.
commitment.
Yeah.
So they're not. There's a lot of foot traffic, and a bad market when you go there and there's like the tumbleweed in the apartment or the house, and there are people around, and it's quite a healthy market. But I don't know that everyone has finance that they're ready to go. I
That's the
think there's,
issue.
there's a lot of tire kicking. Um, I'm looking mostly in Sydney's inner west at the moment, but I'm looking
Mhm.
for very different types of properties. One's like a townhouse type of thing. The other one's an apartment, Lower North Shore as well.
Mhm.
And it's busy. It's busy. There are multiple kind of buyers. Things are getting sold. Um, and we predicted, I think, at the end of last year that we'd do sort of around 5% this year, and maybe a little bit higher. But I feel like that's in play. I still think that the rate cut is going to breathe life into the property market, but it's already there. Yeah. So
Yeah.
I'm
Wow.
I'm in the inner west. It's doing quite well there.
What sort of budget are you looking at in the West? Just out of
I've got one that's just under a million, or let's say a
Yep.
million, and I've got
Units?
that's a unit, and then I've got
Units,
another
yep.
one that's
Yep. Yep.
kind of just above 1.5 million.
One and a half.
And then I've got some others around the kind of low millions as well. So they're kind of but that's a very crowded space in the market. I mean, like let's say 1.5 million, give or take 100,000, is a very crowded part of the market in
Mm.
Sydney.
Mm.
A lot of people looking at that segment. So yeah.
Yeah, no, and we know that there's market within markets in Sydney as
Mm.
well. Like it's never one property market as such. It just comes down to which area you're focusing on. Inner West is always a high demand area, especially the units side of things. Mostly because of affordability, people can still kind of afford.
Mhm.
Yeah, I'll be quite curious in terms of maybe the 2 mil mark side of things, whether
Yeah.
and you'll be getting houses around those, right? So essentially tiny houses, but wondering how they're faring.
Mm.
But yeah. And there's always demand. That's for sure. Lower North Shore, you mentioned. So like the Wollstonecraft, Waverton,
Exactly.
Milson's Point, that kind of area, Kirribilli.
Yep. Yep. Yep.
Yeah.
That's
Givers as
right.
well, or what?
And a bit of Lane Cove as well. And they're busy. Yeah, they're busy. I mean, there's a bit of kind of underquoting as well, so that the foot traffic is quite high. Like, but I was at a inspection at Lane Cove on the weekend, and it was very busy. Um, so there's I think there's a lot of first home buyers out and about.
What sort of budget for Lane Cove one that you're looking at? Like
Oh,
around.
yeah, 950 a million.
Yeah.
That
Okay.
sort
So
of
around a 1 mil mark, sub 1
yeah,
mil basically.
correct,
Okay.
correct.
Are the agents
Yeah,
returning calls?
yeah, yeah.
They are.
That's right. That's their bread and butter.
There you go.
Definitely. Yeah, yeah.
Okay. So that
The
that
agents.
that sounds like, yeah, it's still they've still got times and all that kind of stuff.
Yeah,
Yeah. So when it's
yeah, yeah.
okay.
What are you seeing? I know you work with buyers that have a bit more of a macro view, so like that they'd be more interested in wherever there's best value, like maybe
Mhm.
Victoria or Northern Territory or Brisbane, parts of Sydney. Where are your clients?
Well, the issue is that because my clients are primarily looking at around a 600K
Mm,
purchase price mark, which is not a lot. And I can tell you the 600K suburbs are diminishing very,
yeah.
very quickly to a degree. So the main thing, yeah, there isn't a lot. They're mostly looking at northern side of Queensland, the
Mm,
Townsvilles. I mean, Townsvilles are mostly over 600K nowadays as well. Parts of Melbourne as well. So, the lower social demographic areas they're still looking at those
mm,
areas. So those areas are pretty competitive. I mean, I want to say hot, 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 but there's definitely a lot of investors putting focuses and emphasis on those areas as well.
mm.
And Darwin for a bit
Darwin.
more speculative play type of.
Interesting you mentioned Darwin. So Darwin is we discussed that on our Capital Cities podcast a couple of weeks ago, which is out on YouTube, guys. You should check it out. And I went on to Property Chat, and I said something like, Darwin's the cheapest capital right now. That's where there's value. And I'm like multi-decades cheap, like
Mm,
really cheap.
mm.
And people responded like, John, didn't you read the rest of the thread? Like Darwin's already starting to pop. I think it's been starting to move for the last couple of months, and my charts might
Has.
pick up a couple of months because they go back to the 70s. But sounds like Darwin's already started to move. So Darwin, as we said the other week, that it's like Perth 2 years ago. It's well, where you can make some money, but you'd be investing in Darwin though.
But that's a bit speculated though. That's the only thing, because it's such a small city. Like, I don't know, I can't even recall what. I think Darwin is even smaller than Townsville, if I'm not mistaken, from a population and size perspective. So
Yeah.
imagine just, you know 500 Eastern Seaboard investors decided to flock into Darwin is going to make a pretty significant move in terms of the property
Mm,
prices there. It's just a small minority as well.
yeah.
So it can be a very fluctuating market. But having said that, the yield there is pretty good from what I'm seeing. 500K properties, you can probably get a rent for about 600 or even higher. So you're talking about definitely over 5%, probably somewhere around hovering around 5 to 6% at the moment is what I'm seeing right now. So yeah, for those people who's chasing a bit of yield, so they need a bit of yield, a bit of cash flow, Darwin might be able to suit them quite well. But again, as a water caution, got to be careful because it is a speculative market. As soon as investors start to go somewhere else, they might start tapering off and go flat
Yeah.
for quite a number of years. So,
Yeah.
mm,
I did a Google the other day of like how is the Perth port, sorry, the Darwin port, is it growing? And apparently, like it's because essentially, if you're buying into Darwin, I think you're buying into like an import-export logistics city.
yeah.
And if you believe in kind of the export and import story for Australia, which I think is pretty healthy. I mean, there's tariffs in the US that might affect things like that, but I think overall that's still a growth part of the economy and presumably still a good place to be for the next couple of years. And
Mm.
sometimes something just gets so cheap that it doesn't matter. It's just too cheap and it needs to rebalance, and that
Think
might be
it's
the
going to that. Just like, that was the thing with Perth 2 years ago.
yeah.
it got to the point where it was just doesn't, it's too cheap and it doesn't make any sense. And what next thing we saw for the last 2 years, Perth being skyrocketing, right?
Yeah.
So yeah, I think Darwin's obviously playing a bit of catch up at the moment.
Yes. Look, one thing this is, I mean, I agree that, say, let's say Darwin is cheaper than Sydney.
Hmm.
So your returns over the next, say, 4 or 5 years will be higher if you invest in Darwin. That's almost certain to be the case. But as an investor, you kind of want to invest and then refinance, because you need to be kind of extracting the equity so you can buy another property. It's no good if you have to wait 15 years
Yes.
for a 40% return in 2 or 3 years. Sydney is still better because you're still going to churn out 5, 6, 7% per year, and you can keep going back to the trough. You can keep refinancing, extracting equity, reinvesting, because the results are more linear, more predictable, more boring. Absolutely. If you're a Perth investor, you'd be doing really well now, but you would have been, in a sense, underinvested for 15 years while the property market didn't do anything. And that's why I think if you think of real estate as a game of finance rather than a game of bricks, you kind of need more steady returns so that you can be constantly investing. And that's where Sydney.
I agree with you on that, John. I think that the issue there is not a lot of people can afford buying Sydney
Mm,
or afford to hold onto a property in Sydney as much as they like to,
mm,
as opposed to Darwin, right? So, we were just before come on air say, what can we get for 1.5 million in Sydney? Like that's you can only get an entry level house with a very poor yield of maybe around 2.5%, with a bit of luck, 3% gross rental. But in Darwin, you buy something for 500K, you get a rental yield, say 600 to 650. It's a lot more entry grade in that sense. So, if you weigh up the risk, sure, the people who's got the capital, they got deep pockets, they can certainly take the risk and buy that 1.5 million in Sydney. And that's, yeah, I agree with you. It's going to be slow and steady to be able to give you that
mm,
performance. You'll be able to, assuming finance stacks up, you'll be able to refinance and keep going on that basis. But borrowing capacity is very, very tight. We all know that at the moment with interest rate at the current level, it's restrictive. People can't afford to borrow and can't afford to keep on releasing equity. And they
mm,
certainly can't afford to purchase a property that's around 2.5 or 3% gross rental
mm,
yield. And that's where the issue is, right? Everyone's got there's that ideal scenario as opposed to the reality. What you want to buy as opposed to what you can afford at this
yeah,
point is
correct.
I think it's the challenge, yeah. So and unfortunately my clients are kind of more on the lower end, right? Like they can't, as a first time or second time investor, they're not gonna put all their capital. Number one, they don't have enough deposit to be able to get into potentially a 1.2, 1.5 mil property. It's risky for a first time they're getting into that. So they want to look at something more like a Brisbane, a Perth, or potentially a Darwin if they're more speculative play to be able to easier entry, lower barrier, lower deposit as well. So yeah.
Yeah.
But the concept, look, I totally agree with you, John. So, but look, I think that's a great segue in terms of moving into our topic for today as well, John. I'm glad you
Yeah.
brought that up, as a matter of fact. Um, we were. I know a lot of people are eyeing in Sydney, and John, you're an expert in Sydney, so I'm sure a lot of people have the same question as I do, right? So I thought, what a great way of asking and tapping on that great brain of
Mm,
that John has in terms of investing in Sydney. And look, we'll do another hypothetical here. So let's say we set a hypothetical budget of $1.2 million. Okay, as a property investor, I come to you and I say, John, I've got finance pre-approved. I can get up to about 1.2 mil today to purchase a
mm,
asset or property in Sydney. Okay, up to 1.2 mil. With that budget, and we have multiple options, right? Sydney is a big city, basically. You can potentially get a house when you're out in the western part, very, very western part. You could potentially get a house potentially in the very northwestern part, maybe more towards Richmond, Penrith, that kind of area. Or you could kind of stick more to the middle ground, the middle circle side of things, maybe more towards Ermington, Dundas, get a townhouse or duplex, potentially a bit of duplex. Duplex will be pushing it, to be honest. I reckon more like a villa townhouse type.
yep.
Or the third option, Lane Cove unit, three better, close to
Three
proximity.
beds in Lane Cove. I don't know. Yeah.
Yeah. So I mean, I'm just throwing up to say close proximity to the CBD, but apartment, right? So
Yep.
that's broadly put into three categories: houses, small block of land, very, very far away.
Yep.
Townhouses, villa, middle ring, kind of around that. Um, Inner ring, apartment. If
Yep.
you got 1.2 mil, which do you think? Where would you put your money to in
Yeah,
that?
I agree. I'd also say that there's one other option which is further out west,
Okay.
house and granny flat. So we're talking like
Something around
south
that.
of
Okay.
Campbelltown, let's
Yep.
say.
Okay.
House and granny flat, you can do that for 1.2 million. You can actually
Yeah,
get
1.2.
quite a good asset for that 600 square meters. Potentially the asset side by side, which is ideally what you want when you buy a house and granny flat. So I'd add a fourth because I agree that there's a couple of things you can do. Look, there's $1.2 million dollars is if you sit down with a blank piece of paper and you do some white space analysis, you can come up with a bunch of things to do. But I think those kind of four options that we've come up with are the right things to do. There's like the inner city 3 bedroom unit or the inner ring 3 bedroom unit. There are the houses, and then there's the house further out with the granny flat. Um, so how to decide what to do? I think it actually comes down a little bit to objectives, and I know that that's always a bit of a cop out answer because there's all sorts of things. But one thing that you're going to need to do is hold on to it. And
Mhm.
if you're buying the house, let's say you buy a house in Seven Hills for 1.2 million, which would be a really good option, it's not going to be that high yielding. Whereas the house and granny flat in the western suburbs or the apartments are going to give you more yield.
Mhm.
So, um, I, I personally, I personally think that to, if you don't own anything else, you should be prioritizing location. And so something like a 3 bedroom apartment in the inner west or the lower North Shore, you probably squeeze into the lower North Shore. Inner west is probably a better budget for 1.2 million. Getting a three-bedder old walk up, I think that's probably the right way to start. And I think that you can add some lower yielding assets maybe for a subsequent purchase because I believe in all of the different options that we've talked about. But I would say something like a 3 bedroom unit in Dulwich Hill or something like that would be a good way to start. But certainly, I mean, it's not the only way to do this. But something like a 3 bedroom apartment in an old
That's
brick.
probably a few suburbs now. So you had Dulwich Hill. Any other areas that let's say, for example, someone comes to you and say, I want a three better unit close to CBD. Can you throw me a few suburbs in terms of what you
Yeah, yeah, yeah. So
for
I
that price
mean,
range?
so we're talking apartments, not like townhouses, but you,
Yeah,
you could
apartments.
you could do, I mean, Dulwich Hills, Summerhill, Croydon, Five Dock, all
Okay.
those areas. You could also get some. You could also probably get something in like Leichhardt, Roselle.
My car, Roselle. Okay.
Those areas. I mean, nothing new and nothing flash, but you could get something with 3 bedrooms around there. I think.
One, two.
Um, yeah, for 1.2.
Really? Okay.
Well, I think it'd be tight, but I think it's possible.
Uh,
But I generally think that it would be closer to that kind of other side of Parramatta Road, Dulwich Hill,
um,
Summerhill area. So I think that's the sort of thing that you could do. Yeah, maybe
and
even a week. Yeah,
would these require work?
yeah, they would be old and tired.
Old and tired. Yeah. Okay. So you
Um,
expect that,
yeah, we're
you need
talking
to do
about
some
walk
small
ups.
renovations. Yeah.
Yeah,
Yeah.
yeah, yeah. But that they I mean, right now, I mean, I just love as an asset class the 3 bedroom apartment
Mm.
in the old walk-ups. I think that they are usually they're in quite good locations. I mean, you've got proximity to stuff. They don't make a lot of them. They're in high demand because they appeal to upsizers and downsizers. So, everyone talks about it has to be a house, has to be a house. Houses are better. The houses are better, but houses are lower yielding and they're harder to hold on to. And
Mm.
if
Mm.
you're starting out, 3 bedroom units are lower yielding than 2 bedroom units too. So if you're starting out, I'm a big believer in old 3 bedroom apartments in good locations because location is really going to drive your asset returns over the long term. So
And
that's the sort of thing.
what sort of rent would you be getting in, let's say, Dulwich Hill for a 3 bedroom for 1.2
Yeah,
million?
about $850 a week.
850.
Yeah,
So that would be, what
3%
would
or
that
something, three and a half
convert
percent.
to? So about 3.6%,
There you go.
3.7% gross rental yield.
Yeah, yeah, it's about right.
It's not bad. Okay.
Yeah,
Okay.
it's okay. It's okay.
Definitely much
But
better than nothing.
also, one thing you'll find is that that rent will grow in a way that maybe a one or two better won't grow in
Mm.
terms of yield. So, we say 3 to 3.5% is the yield, but it is the starting yield. It's
Yep.
the starting yield. And
Yep.
so, over time that will improve.
That'll improve. Okay. Because there's still a
You,
scarcity in terms of the 3 bedroom units in Sydney, as opposed to 2 bedroom or 1 bedrooms.
so the scarcity, there's also more likely to be co-location in a three-bedroom apartment. So you get two couples, maybe. You get two small families that might live
Okay.
in a three-bedder. And it's easier to put the rent up on multiple income earners than it is on a single income earner, which is most likely to be the case in a one or two bedder.
So you saying that they're going to be a co-living type of situation moving forward. So that could have, let's say, two families wanting to rent into a 3 bedroom apartment together.
Yep, that can happen, or a couple and one or two kids. It's that sort of thing.
Mm.
Um, yeah, yeah.
But is that
So
going to be on the one lease? So, just, or do you reckon it's going to be multiple leases? I don't think you can do it
I
multiple.
think it would be one lease. It would
One
be one
lease.
lease, but you'd want the names of everyone living there.
Yeah. Okay.
Yeah.
Interesting. Okay.
Yeah.
All right. So that's your
So
number one out of all.
look, it's look. Will a house in Seven Hills outgrow a three-bedroom unit in Dulwich Hill? Probably yes, but we're balancing yield, we're
Okay.
balancing your ability to hold it and your ability to um, structure a portfolio that will allow you to go back. So I'm assuming like a first home buyer. So I think that you'll have more options with the three-bedroom inner west apartment.
Mm.
That yeah, so I think that something like that would be
Okay.
great.
Okay. Great. Okay. So the inner city or inner west, inner ring type of 3 bedroom apartment is probably the more balanced approach out
I think
of
so.
all. So it balances the capital growth aspect as well as the cash flow aspect. So it won't be too difficult to hold. At the
Mhm.
same time, you will still have a good chance of some capital growth in the long
Yeah,
run too.
yeah, yeah. And look, you're not going to add a lot of value to it. It's a buy and hold investment, and I guess I'm assuming that we're talking about buy and hold opportunities. But you'll get growth. I mean, three-bedroom units have done very, very well over the last sort of 5 to 10 years.
Mm.
When certainly over the last 5 years, two-bedroom units haven't done very well. So we say units haven't performed very well. Well, that's mostly true, but it's not necessarily true for
Generalization,
three-bedroom.
basically.
Yeah, 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 yeah. So I think that they're good asset categories to
Okay.
be into right now. Yeah.
Okay.
Mm.
All right, so that's the most balanced approach. In terms of the most capital growth intensive play, let's assume
Mhm.
that yield isn't a problem and you just want to maximize the return on investment from a capital growth perspective. Out of the four options, which one would you go?
I would go like a Western Sydney freestanding house.
The
Um,
1.2.
I mean, it would be quite far in the yeah. Let's say somewhere like Blacktown or somewhere like that.
Okay, sure.
Yeah,
Okay.
I think you could.
Yeah.
The challenge with Blacktown is it doesn't have a lot of development opportunity because unless you're on a corner block, you can't build a
Mm,
duplex. So,
mm.
but I do expect that to change over time.
Mm.
So somewhere, in that sort of Parramatta or Blacktown LGA, buying something around 1.2, which is tight. That's still tight, but you can do it. And that would be, I think, a fairly reliable grower for you. I think that would do quite well.
But
Um,
I guess that's the yield. Unfortunately, the yield on that will be pretty crap, right?
yeah, yeah. One other asset that we haven't talked about, which I think comes under the first four that we discussed, which was like I do like, and again, it depends on kind of where you want to live and stuff like that, but I do like villas in those southern beaches areas, like just past Brighton, Sands, Monterey, Sans Souci. You
Okay,
can
yeah,
get
south.
like a villa, three bedrooms, let's say, if at 1.3 million, something like that. Those it's a thing of beauty that they're very nice lifestyle areas. They're generally not that great for uh, people avoid. Some people avoid them because they don't have a train station, but I mean, pretty tightly held. So, and there's a lot of land content for a villa, so you're getting a mini house. I think they are fantastic assets, and they've grown really well in a environment over the last sort of 5 to 10 years, where not all strata type
Yeah.
properties have grown that well. So that is another excellent option, and you're close to the beach.
Is there a lot of villas around those kind of
Mhm.
areas?
Yeah, yeah.
But would you classify them as being too much supply? I mean, I don't think they're building
They're,
more.
they're old. They're generally speaking old.
Yeah, okay, so
They're
like
all they were built in the 80s.
35.
Yeah, yeah.
Mm. And would that go under, let's say, like the middle ring with the townhouse villa type, do you reckon? Just based on how
Yeah,
far is
I'd
Sans
say
Souci
so.
from CBD?
25 kilometers, something like that.
Really? Sans Souci is
Yeah,
25K.
yeah, 20, 25, something like that.
What I
I'd have
thought,
to Google it
I thought
after,
it's
but
lower
it's
than that because I thought Hornsby was 21. I already feel quite far.
it's about that. I'm in the right ballpark in terms of how
Yeah, okay,
far it is.
interesting. Okay, okay.
Yeah,
All right. So yeah, that we would probably put that under as the middle ring kind of, non-house type of asset.
yeah,
Villa,
that's an
townhouse.
excellent option. I mean, that whole asset class is excellent, including the ones that you mentioned in Hornsby. So that they would be great as well.
What sort of yield would you, let's say, for example, for those people looking at Sans Souci for 1.2 mil for Villa, what sort of yield would you be getting on those?
You'd be getting 9 to 950
It's
for a
decent.
1.3 million.
Okay, 1.3.
Yeah, something like
1.2,
that.
so maybe drop it a little bit down to say 800, 850-ish.
Something like that, and you're probably getting two bedrooms at
Um,
1.2.
okay. So it's about
Yeah,
3.4. So slightly
yeah,
lower than the free bidder.
yeah. It's but super similar. I mean, but similar, and you're getting a good asset. You can hold that forever. Um, the,
No strata title, no strata fee to pay, that kind of stuff, isn't it? Because
no,
these
you
villas are generally no strata.
the villas.
Yeah, the villas,
I
correct.
think there's some strata most of the
Oh, are
time.
they? They're still
Yeah,
strata title.
yeah. There's
Oh,
common
okay.
property and stuff like that. So,
I thought there would be none. Okay, that's okay.
but yeah.
So your wise is going to be bit okay. So let's just say if we this is a very hypothetical question again. I'm putting you on the spot, John. If you compare a Sans Souci villa
Mm,
versus the free bidder that's in Dulwich Hill,
yeah.
we know the yield is kind of comparable, maybe about 0.2, 0.3% differences. So not marginally different, but not too different. But which one do you reckon is going to grow better?
Oh, which one will grow more? Um, that's hard to say. I think they will both do very well.
Both do very
I
well.
think the
Okay.
inner west certainly has high clearance rates. I think there's more buyer demand in the inner west.
Yep.
It's sort of an inferior, like an old three-bedroom walk-up is a less desirable property than a 2.5 bedroom villa or something
Mm,
like that.
mm, mm.
But there's just more people looking in the inner west. So if you can find something a bit rare there, you'd still probably do better.
Okay.
Be close. Be close.
Be close as well. Okay, so comparable. I guess these
Yeah.
two different type of assets will be quite
Yeah.
comparable in that sense. Okay.
But it's a good, I mean, there are, if people lament how expensive Sydney is, and they're right to, it's an expensive city. But if you've got 1.2 million, which is a lot of money, you can do a lot of good things with it. There are, get creative. There's a lot of good things that you can do, and you can live in a lot of desirable areas.
Hmm.
Or you can go for big land, and there's some good options in the land options in Western Sydney as well. So count your self lucky. There's lots of things you could do.
Hmm. Hmm. 1.2 is, yeah, not a small budget, I gotta say.
Mm, true.
But yeah, when you think about it, like I mentioned, you can only get an entry level of house in kind of even the middle ring at the moment, right? That puts a lot of yeah, that kind of tells a lot in terms of how expensive it is Sydney
Yeah,
is, and,
yeah.
and affordability is always being a struggle. So that's why I thought, we set 1.2 mil and see what we can stretch to, in that sense. Do you want to touch on, I guess, the other option on let's say further away, smaller block of land houses? Would you consider those at all? Like, maybe a Keddyville? No, you probably want Keddyville. What was that area? You got to go further west than Rouse Hill. Box Hill potentially.
Yeah, I mean, I guess when I was thinking house in the western suburbs 1.2,
Okay.
I was thinking
Alston.
like
Okay.
Blacktown.
Blacktown.
So, but there
Blacktown's
are other suburbs where it would work. I don't personally, I don't like the Rouse Hill area. I know that a lot of people have made a lot of money, but to invest in like the kind of that northwest corridor now, I think you're buying small blocks of land with cookie cutter properties.
yes.
And I'd rather buy in an older, uglier, maybe suburb than something that is that where the land is so small. So I don't particularly like Rouse Hill, but I keep being proven wrong because it's growing. It's still continuing to grow out there, and the metros come through, which is good. But I want ideally bigger land size, and an older house. I'm happy to buy an older house. So that's kind of where I line up.
Another question just popped up in my mind. So schools versus land sizes.
Mm,
A lot of people choose based on schools, zoning, so good public
yep.
schools, good Catholic schools, that kind of stuff. So, in this instance, let's say, because I reckon one of the reasons those Rouse Hill, those areas is because of schools, right? Like they got good, decent public schools that's affordable for people. They don't have to break their bank to send their children into a Catholic or even a private to that
Mm.
degree. They can still get good, decent education. Which I'm not sure about Blacktown area, to be honest. Are there any decent schools around those? So if you compare those two, just out of
Yeah.
curiosity, Rouse Hill, a small block of land close to good schools, as opposed to Blacktown, bigger parcel of land, older houses, but education-wise isn't as great. Do you reckon that'll play a factor in terms of the capital growth in the long run as well?
Clients ask me about schools, so it's definitely a factor. Um, I just think ultimately it's convenience. So people just want to be close to where they work, and there's still, we talk about Parramatta and we talk about the CBD. There's one CBD, it's in Sydney, and people want to be able to get there and back,
Yep.
quick and easy. And I just think it's not necessarily schools; it's the location. I think that anything within 20 kilometers of the CBD, which is quite close,
Okay.
is ultimately the best type of investing. And yes, I realize that means you're sometimes going to be investing in strata blocks and apartments and so on. But I
Mm.
think for long periods of time, that is where you're going to have more and more people trying to buy fewer and fewer places, with no new supply. And I just think that trying to get as close to where most people work, which is the city, is
Mm.
the best
So
kind of
yeah, potentially
strategy.
Parramatta.
It's so boring, but I think it works. Now, land size is important, but then if you take that to some absurd, or land in the middle of nowhere, is not valuable, because it's not close to anything that you need. So, which obviously doesn't apply to Rouse Hill or anywhere like that. But land content by itself is not the most important driver.
Mm.
It's got to be, particularly if you've got to stick a tenant in there, because we're talking about investing. I think that, in a ring, boring is beautiful. I think that's what
Okay.
you want.
All right.
Yeah.
Okay. Cool. Shall we touch on the last one then? Potentially a Campbelltown, a house, and a granny flat. We haven't touched on that one.
Yeah.
Um, this is a bit of a balanced play as well, with good capital growth potential plus granny flat. There's still a lot of opportunities around these in Campbelltown areas at the moment.
Yeah, yeah, it's a growing area. I mean, 1.2 million honestly, it's more than you need for a house and granny flat. You can get them cheaper, but then you can buy less expensive than 1.2 million, but it's easy to make mistakes when you're buying a house and granny flat, like, pizza shaped land with a little granny flat down the back that's hard to
Mm.
get to. I'm talking about like a really good product where you've got the house and granny flat next to each other. You've got
Side
a,
by side.
a fence down the middle and that sort of stuff. So that
Yeah.
that'll cost you a little bit extra,
Okay.
but it's worth it. It's a great asset type. I mean, when you're buying house and granny flats, you're essentially prioritizing income. There's nothing wrong with that. In fact, it's why else would you invest in real estate's important to have income, but you're also compromising the, primary asset when you buy a house and granny flat. So
Mm.
you're trying to mitigate that big risk, which is how do I not devalue the primary asset and still get my two incomes and still get capital growth. And that is by targeting house and granny flats side by side. I bought several of these actually, but they're hard to find.
Mm.
And you realize you have to pay a little bit extra for the side by side opportunity. I bought one in Ingleburn maybe 6 months ago for a
Oh
client,
yeah.
600 square meters. It was under 1.2, and it was a brand new granny flat and a house. And in fact, it was a six-bedroom house and a two-bedroom granny flat. So,
Oh,
in
big
terms of
house.
incomes, which is a game of bedrooms, they had eight bedrooms. So really great income.
What's the rent? What's the rental yield on that one?
Well, I can't remember. I can't remember. I think they were getting 1,100 all up. So they would have been, it would have been about 5.5% or so
That's
what they
amazing.
paid. Yeah.
But Ingleburn is we know that it used to be an industrial area, and
Mm.
now it's gentrified quite a lot. They're still releasing a lot more land down towards that direction though. Camden, and beyond. There's a lot of land supply coming that way. So do you reckon that the capital growth on those will still be okay in the long run?
Yeah. Yeah. I think so. I think so. I think that
They're not
this,
landlocked. That's the thing.
yeah, Southwest is continuing to do well. I think until Badgerys Creek
Done.
is finalised, I think
Mm.
that general sort of corridor is going to be a fairly reliable performer.
Mm.
Yeah, I think Liverpool is the best way to play Badgerys Creek.
Liverpool.
Yeah, Liverpool. Yeah,
Okay.
that's what I think. Yep.
You throw us a few more suburbs around those Campbelltown area where you can potentially get the house and grand flat type of configuration. You've given us Campbelltown, you've given us Ingleburn. Any other ones that people can potentially look for these type of
Uh, oh, none that kind of come to mind. I remember doing the search at the time, but I would just say click include surrounding suburbs, and you'll see all the.
with
I mean,
granny flat option?
Smithfield and some other
Oh yeah.
places. So
Okay.
they're all quite
The surrounding
quite good.
Liverpool and
Yeah,
Campbelltown area,
yeah,
kind of.
yeah, yeah. And you'll find something, and that's a good. But again, be selective with house and granny flats because there are a lot of ways to get it wrong.
Mhm.
That there aren't a lot of them, and there aren't a lot of good ones. So, but if you're selective, it's an excellent type of asset class because, as I said, you're making good cash flow, and you will get growth if you buy the right type of asset.
Mm, mm. Interesting.
Yeah.
Okay. Okay. So, by the sounds of it, out of the four options that we talked about, roughly, John's most preferred is still the inner city three better apartment. Am I
Oh,
correct?
yes, I think so.
Type
I
of,
think so. It
yeah.
might be a tie with the Villa, but yeah, I
Sans
think
Souci Villa. That was a
something like that. Yeah.
close number two. Let's put it that way. Followed by
Close number two.
Campbelltown House and Granny Flat, or
No, probably followed by
Blacktown
the house in Western Sydney,
House in West
which is a
Sydney.
growth play. It's you won't get a lot of yield out of that. And then I'd say House and Granny Flat in Campbelltown as number four, which is an excellent investment opportunity, but quite a specific type of asset,
Yeah.
specific
Okay.
type of outcome.
I think the logic there is proximity to the CBD, as you
I
said.
think so. I think that's always the best thing to fall back on.
Mm, mm.
Yeah, but you're compromising yield in most instances.
Yeah. Right. Okay. There you go.
Hmm.
I should put this as a special episode in terms of where to buy and what to buy for John, right? So, well, thanks for sharing all that knowledge, John. I mean, it's great, and I'm sure these are type of questions that people will probably want to ask an expert BA as they're looking at properties and looking at investment options. You know Sydney very well, so I thought I'll put this out to you, and we have this chat so that a lot of people can benefit from that as well. So thanks for sharing all that knowledge and throwing out the suburb names
Yeah.
so that people can go away and do some of their research for their next potential Sydney opportunity. Anything else to add? Anything to wrap up with the ball on the tie?
No, I think that's
No?
it's good. Yeah, I mean, it's I guess I just clarify it's not advice.
Yes,
Do your
definitely
own
not
research,
investment advice.
etc. But I think you can. I think my view is that right now you can invest with confidence, and that the property market is not as expensive as you might feel it is
Mm,
in
mm,
terms of the grand scheme of things. So happy investing in 2025.
absolutely. All right. Okay, thanks everyone for joining us today for that episode. Like John said, this is definitely not financial and investment advice. We're just basically providing some information for you guys to have a think about, and hopefully, it gives you a bit of light bulb moment in terms of what to look for if you are considering getting yourself into the Sydney market in 2025. Otherwise, we will see you guys again in another episode of Spark Your Fire. Cheers, John and David.